Alright, how is everybody doing today? Welcome back to the channel. In this video, I'm going to be talking about my portfolio of stocks that I hold that are 5x stocks. So I have about 4 stocks that I'm going to be talking about in this video. And then I'm going to show you my portfolio of stocks that I hold where basically the next 5 to 10 years, there's a very good chance I'm going to 3x, 4x, 5x in the next 5 years or so in the stock market. So these, in my opinion, I'm going to be going through all of them and why I think they're going to be happening. A lot of these stocks you probably, if you watch the channel, you've seen me talk about already, but it's definitely pretty interesting. So make sure you guys stay till the end. Right before we jump into it, if you haven't already, make sure to subscribe to this channel. I'm trying to hit 1,000 subscribers by the end of basically by the beginning of summer. So if we can hit 1,000 subscribers by summer, that would be amazing. If you guys are watching this and are not subscribed, just press the subscribe button. It's gonna be really appreciated and it'll mean a lot. So let's just jump straight into it. Now, the first stock is obviously we're gonna have to talk about Tattooed Chef here today, but today the Dow was down quite a bit. Nasdaq fell over 1%, and then the Dow fell basically at one point over 1%, but now it's about 1% down, all because of the basically Biden was talking about increasing capital gains taxes all the way up to like 38% or something, which is kind of crazy. So we're gonna be looking at those, and a few of these stocks are actually down because of this news as well, so that could be pretty interesting for you guys to pick up some of these. But without further ado, let's just get into it. So this is basically my portfolio of stocks, right? I hold Tesla. I don't have the amount that I hold just because I might show the amount one day, but I guess I kind of want to keep it private for now. But these are the basically the percentages of my portfolio. So Tesla is like 50% of my portfolio. I didn't mean it to be 50%, but it's just grown into it. Now this 500% is a little bit misleading. I'm probably up like 1,000% on this stock particularly, but basically I think in 2020, beginning of 2020, I sold my Tesla and I transferred it to this account, so the numbers haven't really updated, but basically I'm up over 1,000%. I've been holding Tesla for a few years now, but the rest of these numbers are pretty accurate. I believe all these numbers are pretty accurate. I think Tesla might be a little bit under 50% because I do have a Roth IRA, which basically just holds Tattooed Chef, Facebook, and then S&P 500. So this 50% is probably like 40%, but it's still pretty damn high of a percentage. Like I wouldn't, if I had to build up my account right now, I wouldn't have this at 50%, but because it just grown into it, I'm just gonna leave it there. Tattooed Chef's like 12%, Facebook 10, Corsair 6, 7, and then etc. You guys see it. I own Dropbox, and then I just have an S&P 500 ETF. I liked keeping this instead of cash. As you see, I'm up like 30%. If I was just keeping cash, I would be at what, 1% interest, 2% interest over the last 2 years? Not much. So it's a good thing I'm holding into the S&P. So it's definitely something to consider. If you are just holding cash to buy into stocks, maybe just hold S&P 500 ETF. Maybe that's a little bit better. Obviously, you get dividends from that, etc. Beyond Meat is what I hold, and then Upwork. So we're going to be talking about some of these stocks, probably all of them. And in my opinion, in the next 5 years, a lot of these are going to 5x for me, or maybe even 10x, a lot of these stocks. Now, in my opinion, I think I can get my whole portfolio to 5x in the next 5 to 10 years. Like in the next 5 to 10 years, I think maybe in 10 years or so, I think I could get my portfolio to 5x from here. And basically, I'm going to be explaining it why. First stock we have is Tattooed Chef. Now, I made a video, my last video, talking about why I think this is selling really well. Basically, since then, the CFO left the company. So as you see, it went from 19 bucks. I think I talked about the stock at 19, I believe, could be wrong. It fell all the way from to like 15.50, under 15.50 a share for Tattooed Chef. That is nuts. I did pick up some shares at like 15. That was a crazy steal in my opinion. This stock is still really cheap at a really good price. I'm not going to talk too in depth, but basically this company is growing massively. They're going to grow 60% this year, probably another 30-40% next year, and so on. In a 4P ratio, they're probably at like a 54P in terms of my calculations. Obviously, Yahoo Finance has it about 277, but in my calculations, I think they're going to be at like a 50p at the end of next year, which is crazy low for this company. And then they have 200 million in cash, so you got to keep that into consideration. Like 20% of this stock is in cash they hold. and they're just moving so fast and innovating so well, and their products are selling like crazy. I wouldn't be surprised if this company is at 5 to 10 billion within the next 5 years or so. I don't have any doubts about that they could get there, especially since they're going to be expanding, and obviously the vegetarian space, vegan foods, and like plant-based in general, healthy food in general is just growing so quickly. So they're basically in a market that's not necessarily been untapped, but it's in such a growing market, and they're innovating in such a fast pace. Really reminds me of like a Tesla stock right here. So definitely I think this is going to do really well for me. The next stock here is Corsair Gaming. Now this company, I think it's not going to be a company that like 5x's that fast, but it has incredible growth ahead of it. Basically it's trading, it just grew massively, right? If we look at the, let's see how much they grew within the last year or so. Financials, they grew all the way from 1 bill to 1.7. So they grow like basically 70% over the last year, which is completely crazy. They have a 4P of 20, which is stupidly low. They just grew so much, stupidly low. The reason this is because a lot of people think that once the world opens up, many people are not going to be like streaming, watching streams, and basically gaming. But in my opinion, that's complete. I mean, if anyone knows anything about the space, that's not really going to happen. People still like to play their games. And if anything, it's going to even increase on here when people get money, and then they can spend more money into these products. So you can see just the Twitch numbers. It's opening up, right? Doesn't matter. The Twitch numbers are still exceeding records. Basically, this is the biggest live streaming site in the world in terms of how many people are watching it at once. And in the gaming space, I don't know what numbers China has, some Chinese websites, but in terms of like the US and American markets, English markets, this is definitely the #1 site out there. They're growing crazily. In the last 2 years, they tripled their numbers of streams. And Corsair is basically a pure play on streaming. So trading at a 20 PE, it's nuts, man. It is nuts. And I think this company is very well positioned to do really well in that space. They have basically their CEO, which is the founder, has been in it since day one. They own Elgato. They own basically all the like computer parts, all the Corsair branded products. And then they also have Scuff Gaming, which is any console players that play on basically Xboxes and stuff. They have one of the most premium controllers in that space, and they literally get free publicity on YouTube. Like, you go search up Scuff controllers on YouTube, there's people just playing with the Scuff controller getting hundreds if not millions of views on YouTube, literally like that, with free promotion. So I just love how the company's running, and basically how good they are with doing minimal advertising, which is kind of crazy. Next stock right here, Facebook. Now this stock, I think I'm going to do pretty well on. In my opinion, it's going to be over $1 trillion, if not $2 trillion in the next 5 to 10 years, easily, in my opinion. They own Instagram, Oculus, even Yahoo Finance has them at a 40% estimated return, which I never look at that. It's probably always wrong. But even if Yahoo Finance says it's undervalued, then you know something's up. But basically, every single big tech company is trading at a premium except Facebook. It's kind of crazy how looked at Facebook is, and especially today it's down 2%. Under 300 is pretty interesting for Facebook. I remember back in the day, under 200 was easy money for Facebook stock when it was keep going under 200 bucks. But under $300 a share, I think Facebook is pretty damn interesting. I mean, you have them growing crazy numbers. They have a 4P of 26. But you got to remember, after next year, their growth is not slowing down. They have 20% growth in 2022 expected, with 45 analysts saying this. It's very high growth company for this stock. And I think, if you don't know, basically Facebook has probably half of their employees, over half of their employees are working on virtual reality. So if there's a company that completely explodes in the virtual reality space, it's going to be Facebook. They, with their Oculus brand, the rate that it's actually selling, like even me, who's someone who doesn't really play video games that often, I even want to buy one just to try out some of the games on it. It's actually really cool. And I wouldn't be like, it's kind of reminds me of the Kinect back in the day when Xbox had the Kinect and it completely exploded, but it kind of died down. I feel like Oculus is going to be the next big thing, and then that hype around virtual reality will is going to be what sets off Facebook stock to be over $1 trillion, over 1.5 trillion. I think, in my opinion, it's what kind of brings the hype back into it. A lot of people think Facebook will be separated and Instagram would be its own company, but man, that's really unrealistic. I feel like that's one of the scarcity things around this company, is that they feel like they're going to separate the two companies. But man, even if that happens, like I mean, it's such a nuanced thing where Facebook, even if it's separated, it's not like you're still going to own Facebook stock. You're still going to have Instagram stock. So those two companies are still going to be valued pretty damn high, if not even higher than this. I think Instagram alone is probably worth $500 billion by itself, right? With all their advertising. And it's not like those companies can still do advertising together. They can still partner up, in my opinion. So, I mean, yeah, that's something to consider. I don't really think there's anything to be scared about. If, let's say, Facebook goes back into the news where, okay, now they're in front of Congress and they have to testify, the stock falls 5%. Dude, I'm buying that stock. I'm buying more Facebook. I just feel like it's very, very low risk stock trading at this low. And even if the company like doesn't execute really, which is very unlikely, the stock will still grow pretty nicely, man. I think even seeing TikTok grow so fast, and Instagram really hasn't died down. So I think that's a very good sign. It's a very good sign for sure. So next up, we have obviously Tesla stock, right? This company, man, trading at under 700 billion. Now, this stock isn't gonna be one of those stocks at 5-10x's, right? But in my opinion, in the next 5 to 10 years, 2030, man, EVs are probably gonna be majority of sales, of new car sales, in my opinion. And I think that's a very likely thing. Even if Biden doesn't do anything to increase that trajectory, I think that's easily going to happen. Tesla, no doubt, will be over $1 trillion in market cap. I'll 2x in the next coming years, right? Tesla's down 3 to 4% here today. I don't even think about selling it, right? I don't even consider selling the stock. It's a long-term play for me. So, yeah, I'm definitely holding this. And man, just the way they run the company is nuts. At 170p, it's actually not too bad. Like before, when it was at 1004p, I'm like, okay, it's kind of expensive, but I mean, I'm still gonna hold it. I still believe in the company, and I mean, they're continuing to just expand and do crazy things. They're pulling crazy numbers. Obviously, they're gonna sell over 1 million cars this year. They have like 1 million Cybertruck orders just on pre-order. That is crazy, man. Let alone once people start seeing it in the real world, dude, that's gonna be nuts. In my opinion, I think it's gonna sell really well. A lot of people haven't taken account that the Cybertruck is probably one of those cars that a lot of people buy for businesses because it's a heavy car, and heavy cars get huge tax benefits. So if you're a business owner, and that's another reason why you see a lot of Ford F-150s on the road, because those are heavy cars, and heavy cars have that business utility, and then you can write it off on your taxes. So a lot of business people just have Ford F-150s, if you've noticed. And I feel like Cybertruck will be exactly that. I mean, it will be one of those cars, because if the heavy constraint is there where you can actually write it off on your taxes. So I feel like a lot of business owners might just buy Cybertrucks just for fun, just to have it for like really cheap, because they can write it off on their taxes. Obviously you see Yahoo Finance has them as negative 63% estimated return. Yeah, that's why you see you should never trust what you really see here. But yeah, I think their earnings are coming up. Make sure, guys, I won't be making a video when Tesla earnings come out, I think Monday. So this coming Monday. So definitely make sure to see that. So I think this company is easily, when I ran my numbers, man, I see them being at 1.8. I see it being a 3x, 2 to 3x from here within the next 5 to 10 years, in my opinion. If not, probably closer to the 10-year mark. This stock can definitely be flat for the next few years. But yeah, that is that. So question guys might ask is, why don't you just hold Tattoo Chef? If you think Tattoo Chef is going to 5 to 10x in the next 10 plus years, 10 years, why don't you just hold Tattoo Chef and go all in? 50% Tattoo Chef, 25% Corsair, 25% Tesla. Why don't you just do that? I mean, that is, in my opinion, you should never look at it that way. I think a lot of people underestimate why it's very important to have a portfolio where if Tattoo Chef doesn't execute, I don't think that's going to happen, but let's say 10% chance that they don't really execute, it doesn't go their way, or hell, let's say a huge competitor comes, let's say Beyond Meat goes nuts, and then I don't know, like there's a shift in culture or something, which is unlikely, but let's say something happens and Tattoo Chef just cannot get into stores, they can't execute, and then their margins, their sales fall, and then the CEO leaves. I don't know, man. Let's say something like that happens. I mean, anything's possible. I'm gonna lose all my money. I'm gonna lose, not all, but probably like half my money if I did that, right? That's why you should never look at it that way. If you have 10 stocks that all of them you think might 3x or more within the next long term 5 to 10 years, don't I mean, that's a lot better chance. Let's say 5 of them happen, 1 of them fail, you're looking very good, right? Now I am also a believer that you shouldn't diversify too much. Like, you shouldn't have 30 stocks that you think are gonna double, right? Because if all 30 stocks double, that's very, I mean, 30 stocks, like, is it really gonna be, first of all, it's very hard to manage a portfolio with like 30 plus stocks, and then again, also it's gonna be pretty hard to make a lot of money when you're that diversified, where if you have like 5 stocks and one of them 10x's, where if you had 30 stocks and one 10x'd, you have so little money that it's not going to be that significant. So I am also a believer of the less money you have, the less stocks you should hold, because that's how you can like exponentially grow your wealth, if that makes sense. Basically, if you have, let's say you have 10 grand in the market, you want to have like 5 stocks, let's say, right? Each stock is 2 grand, like 2 to 5 grand a stock. And if that one stock that's 5 grand you have in that stock, 10x's, now you have 50 grand, or yeah, now you have 50 grand. Where if you had 10 stocks with 10K and a 10x's, you have 10 grand. So now you have 10 grand versus 50 grand. Hopefully that makes sense. But I think the less money you have, the less like diversified you should really be, especially if you're a beginner in the market. So that's why I personally don't have a bajillion stocks I hold. I only have a small amount of stocks I hold, but if they all 2x, or if one of them 3x's, 4x's, I'm going to be looking really well, if that makes sense. So my last one is Dropbox. Let's just go to the last stock. Is Dropbox, I'm up pretty well. I mean, if you saw the screenshot, I'm up 30% on Dropbox right now. I'm down 20 on Tattooed Chef, but I'm not worried a bit on Tattooed. I don't care. I'm expecting to be down 30-40%. I wouldn't really mind it. I just average down. I'm always buying, adding more to my Tattooed Chef position. I think the stock will be $60 stock one day at least. So, I mean, a few dollars, it's falling $5 isn't really a big worry or concern to me. At 26, I mean, at Dropbox right now, right? This is a stock where it's very, I'm not gonna make exponential amount of money on this stock, but it's a stock where it's a very low volatile stock in terms of they're gonna be around. They're not gonna go out of business anytime soon. They've been around for like 5-10 years and they're growing very steadily. Just look at their Yahoo Finance growth. Look at this, such a steady quarter after quarter they're growing, right? Don't look at their Q4 earnings. This is like not entirely accurate. They had a one-time expense, but very beautiful growth in their thing. And then they have a beautiful balance sheet. They're not going bankrupt. It's a company where basically I think it's going to be kind of easy money. I'm not going to make a ton of money on this stock, but over time I feel like they're going to do pretty well. They own HelloSign, which basically owns basically like DocuSign, where let's say you're a real estate agent or you're selling houses, or you're even a renter, you own houses and you're renting it. It's basically online signatures. It's very big, and if they do big in that space, they're going to do very good, and their market cap is going to grow a lot from their revenues, etc. So it's one of those, it's a base stock for me that I think is going to do pretty well. I don't have a huge amount in this, but it's kind of like a baseline stock where I feel like it's a steady conservative play where I think it's going to do pretty well. That's pretty much it. I don't want to talk about Beyond or Upwork, because look at this. I only have 1-2% of my portfolio in this. Even Upwork, I think I have some in my Robinhood account. So I think, but even then, I think Upwork, I personally do use Upwork for business use. Like I do graphic design and I make money off Upwork. So that's actually kind of funny that I'm up on Upwork when I'm a user of their product. So that's the stock I really like because I use it myself. And basically most of these products I do use myself. I would say I use every single product here myself, where I own their products in some shape or form. So Yep, that's that. So hopefully you guys enjoyed this video. Thanks for watching. Are you guys buying any of these stocks I mentioned? Let me know. Make sure you guys subscribe to this channel as I'm trying to hit 1,000 subscribers. So if any of you guys can sub, that'll be really appreciated. And I'll see you on my next video.